Back in the action once again. It's about that time of day again here, folks. Always great to be here with you guys and gals. I missed you over the weekend. Hope you guys had a great weekend out there. But it's time to roll up those sleeves. It's time to get back to work. We got some big opportunities setting up for tomorrow morning's trading session, and I want to make sure you guys know exactly what to look for. And in case you forgot, don't forget it's Monday evening. It's August the 12th, 2019. Kids going back to school this week. That means good for the markets. My name is Joseph, by the way. I know it's been a while since we've worked together here. Was gone a little bit last week. So great to be back here with you guys and gals. And in case you forgot, I help traders find high-quality trade setups. I help traders avoid common traps, easy losses to avoid. I help traders grow their accounts using a simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight's a little bit different. My job tonight is to find the best levels of support and resistance, identify the best setups to take tomorrow, the best traps to avoid tomorrow, and we're going to cover everything in between. And of course, I'm going to cover tonight oil, S&P, Nasdaq, gold, and of course, we'll wrap up tonight on that mighty euro. I'm going to jump in here to oil tonight. Oil is right button up against that prior resistance from earlier on in the month of August. We're bullish, but I think it's time to wait for a deep pullback, or we've got to look for some more proof going higher here. Let's grab that black gold. Let's grab that Texas tea, that crude oil futures. And let's dig into this here, because as you can see here on oil, we're definitely bullish on oil right now. There's no doubt about, right, the overall bullishness on oil. But if you look left, and we're going to go over a lot more detail on this tonight on the video, but if you look left, right, this is right back into that trading range where we began the month of August. So of course, we're right back up into this range bound area here. And so we're bullish, but we're a little bit too high to be buying right now. I really don't want to buy high. I always want to buy low. And so ultimately, I'm looking for a pullback here on the oil market here for tomorrow. I've got some great levels of support, as you can see here drawn on, and I've got three different patterns I'm looking for now on the black gold, on the Texas tea, on the crude oil futures to buy that pullback. Now, I'm also going to talk about what if the market goes higher here, because as you can see, we can't really get away from this overhead resistance here. There's a lot more resistance waiting overhead. So if we do keep pushing higher, I've got a very specific plan in store for us as we go into tomorrow's trading session as well. So looking to buy pullbacks, looking to avoid buying high right now, and we're going to break this down into small bite-sized pieces here for all you crude traders, so make sure you stay tuned on that. Over on the S&P really has two big factors right now. One, of course, is this very strong bear move down. The other, right, is this trading range. We'll take a look deeper into this in tonight's video, this big trading range. So obviously this bear market lower tells me that I want to be a seller, right? I got some key levels of resistance overhead that I want to be a seller on, right? But that trading range tells me not so fast. This could easily get dragged right back up to retest those highs tomorrow as well. Now, how do we know which is which? Well, I think this trend line coming up right now, I think that trend line is probably going to be the most important variable. A little tiny trend line that's probably going to be the biggest kind of variable here as far as whether or not we're selling it or we're buying it. And of course, we'll talk about more specifics on the exact setups we'll use on this here tonight on the video newsletter. Over on the Nasdaq tonight, Nasdaq is in a little bit different scenario, but very, very similar to the S&P. We can easily see we are overall bearish right now, right? We're definitely bearish here on the Nasdaq, but look at two big components here. One is this channel. And of course, this channel is sitting right at the low of that channel right now. So obviously we know that at the low of this channel, price is going to want to rotate higher here. At the same time, look at that big juicy trading range. What's a range tell us? Balance, right? And of course, just like the S&P, it's going to want to drag that market back higher again. So we know we're bearish, but I'm thinking about being a buyer right now on this NASDAQ. How do you buy safely in a bear market? I'm going to talk about two distinct patterns to look for here to give us a chance to buy this market now going higher, and then got to make sure we don't chase after it, because as we get back to the highs, we may also see some chances here to sell it off of that high. So we have a lot to cover here, both the buy side and the sell side here on the Nasdaq tonight. And then, of course, how about that gold, right? Boy, gold looks very bullish right now, doesn't it? And it has been both fundamentally and technically bullish over the past couple of weeks, right? A lot of chaos out there, a lot of tension out there in this world right now. And you can definitely see gold is bullish right now. There's no doubt about the bullishness of this gold market. But look what happens here. Look what happens here into the closing bell. Remember, gold closes up at 2:30 Eastern time every day. Look what happens on this big run up and then run back down. I'll tell you, normally on those big spikes and moves right back down, normally, right, it's a make or break back to retest the high. If not, we might find ourselves pendulum swinging back down to retest that low here. Speaking of pendulum swing, check out that nasty little tiny trading range right in the middle. When you put that in, what goes up, we should end up back down into that trading range. I think this gold bit off a little bit too much than it could chew here, and I'd like to see if I can sell this puppy back down into that trading range. I've got a very, very specific pattern, though, to look for on this because obviously we are overall bullish right now, right? So being a seller, we'll take a little bit of finesse. We'll look to thread that needle here on the gold tomorrow. And then, boy, if we can get down to those lows again, get that pendulum swing, we can probably buy this baby right back up into that trading range. So looking for a short, looking for a long, all thanks to that trading range. And, of course, we're going to break down that yellow metal into small bite-sized pieces here in a moment. And then speaking of a range-bound market, boy, this world must be worried about what they're going to do with the dollar right now because you can see that euro is just chopped up, coiled up, right? Not much has changed since the last time I saw you guys. We're still stuck inside of that narrow trading range. We're rotating back and forth. That range tells me to buy low. That range tells me to sell high. And of course, tonight we'll talk about how to buy those lows, how to sell those highs, because as you probably have noticed, right, we're going to keep on buying low and selling high until something changes here on that euro. So we're going to break down the exact buy patterns, the exact sell patterns we'll use here on the 6E, those euro futures as well. So we have a lot to cover here tonight. Euro, gold, Nasdaq, S&P, and crude oil. But before we jump into those charts and put all the pieces together, I just want to remind you that before I publish this video on my YouTube channel every evening, I always send off an email to everybody on our mailing list. That way, everyone on the mailing list is the first to get the crack at the video newsletter so you know how to trade the overnight Asia into London sessions. I want to make sure that you get that email. I want to make sure you never miss another newsletter video. And to do that, it's really, really simple. Just join our mailing list. All I need is your name, a real email address, and then hit that subscribe now button. And don't forget, when you subscribe to join the mailing list, your job isn't over yet because you still need to check your email inbox and look out for the welcome email. It's true. I'm going to send you a welcome email once you register for our mailing list. And I'll tell you, that welcome email will have a verification link in there that you need to click. And it also has a bunch of great free resources for you to help you get the most of our time together on this video newsletter. And I'll tell you guys, sometimes that welcome email gets stuck in your spam folder. So if you don't see the welcome email, check that spam folder. It might be there as well. And then I need a couple minutes of your time here real quick, if you don't mind, right? I always appreciate your valuable time. Down in the comments section below this video, I'm always looking to improve this video. As I always remind you guys, what would be your advice to a rookie trader on things you should really focus on or things you should avoid? If you could go back in time, right, and give some advice to your rookie version of yourself, what would be the most important thing to focus your energy on, and what would be something to avoid so you don't lose money? Right? Give me some feedback, guys. If you could give the rookie version of yourself some advice on what to avoid and what to focus on, drop me those comments in the comment section because I want to know what you guys feel like is the most important thing to a new trader. And if you are a new trader, right, in the comment section below. Let me know, in your opinion, what's the biggest obstacle standing between you and becoming consistently profitable and confident in these markets, right? Is it the right software? Is it the right strategy? Is it the right mindset? Is it the right trade room, right? In your eyes, what's the most important thing, if you're a rookie trader out there, that I can help you overcome? Guys, it means the world to me when you spend a few minutes of your time to drop me some comments in the comment section below. And while you're down there, give me a thumbs up on the video tonight, because I'll tell you, when you hit that thumbs up button, it really helps to expose this video to every other trader in the YouTube world, because we all know there's lots of traders out there that can use this help as well. So post me a comment below in the comment section, hit that thumbs up, right? That thumbs up like button here on YouTube. It means the world to me that you guys spend that time every evening to do that with me. And then don't forget, if you have any questions and you don't want to post in the comment section below, please feel free to call that toll-free phone number. I'm going to date myself right now, but I actually talk on my phone, believe it or not. When the phone rings, you know, kids, we didn't always just chat back and forth on telephones. We used to actually talk to one another. So pick up that telephone, call me in the office, because I want to help, right? Maybe you have questions about the best brokers, the best charting and data software right now. Or maybe you have a question about how to get access to our free trading classes or our free pass to our trade room. Call that toll-free phone number, use that live support tool, and I'm always here to help every step of the process. But first, before we finish up with that, let's make sure we get to that, right? Let's get into the video here tonight. Jumping into the video here this evening, let's take a look at the schedule here for tomorrow. Tomorrow, of course, is Tuesday. It's August the 13th. And let's see what we have here on the schedule. First things first, we got the big, pretty much what I think to be the big news of the week tomorrow morning, and that is the CPI number at 8:30 Eastern time. Now, obviously, we got the petroleum status report at 10:30 on Wednesday. We got some Philly Fed and some retail sales, right, on Thursday, and housing starts on Friday. But as far as this second full week of the month, I think that CPI number tomorrow morning at 8:30 is most likely going to get all of these markets moving pretty well for us, and definitely looking forward to that. Now, CPI, that is the Consumer Price Index, right? Anytime you see CPI, PPI, right, all of these indexes, you want to think inflation, right? It has to do with the money supply. So CPI, PPI, right, any of these inflation indexes, you're thinking euro, you're thinking gold, right? All of the commodities tomorrow are definitely going to be on our radar. Anything that is highly correlated to the US dollar is going to be on our radar tomorrow morning, bright and early at 8:30 Eastern time. So make sure you come out and join us tomorrow, because in our trade room, we open up every morning at 8 o'clock Eastern time, and we'll have a front row seat for that CPI number tomorrow morning at 8:30 Eastern time. Then, of course, we'll talk about the plan for the rest of the week when you guys come back and see me in tomorrow night's video. In the meantime, though, let's jump into some charts here, get these charts all working here for us tonight. I got some crude, S&P, Nasdaq, gold, and euro on the chart for tonight. Let's start first here with those oil futures. Now, as I mentioned earlier in the introduction, we definitely know we have a bullish market right now, but as you can see here, we are back into that same area once again where this whole month started, chopping around this $55 big round number. So we know we're bullish, but we can definitely see we're in not really the best place to be buying right now. You know, not only did we see a big run up, we pulled back, retested, they couldn't get it going there. It just looks like they're running into a little bit of a wall here up around that $55 a barrel. So with that said, I don't want to force the trades up here. I don't want to buy high right now. I want to buy relatively low. So what I'm going to do is I'm going to go looking for areas of support that I can now buy on a pullback. And one of my tricks for finding great support levels is to start with the opposite and find a level of resistance. Believe it or not, this is a very easy way to find levels of support. Rather than looking for a support level, look for a quite obvious resistance level like this trend line I'm illustrating here, and then bring that trend line down to those lows, and that now creates a very reliable level of support. Now, we can also see, of course, this prior low at 54 and combine that, right? Combine that trend line along with that swing low, and now you've got your battle zone, right? Your buy zone. So I'm looking for price to pull back here for me. And as we get that pullback, let's zoom in on this a little bit closer here for us. As we get that pullback here, let's get rid of that here for us. Imagine now we see a strong move down. The moving average comes over. The sellers now try to sell off of that moving average, right? Thinking that this is a bear market at that point. It's not though, is it? It's a bull market just pulling back off the high. But once we see those sellers sort of sell off that pullback, now we know exactly where their stop losses are, and we can now look to buy right into those stops. And then don't forget to wait for the pullback setup, right, to buy that pullback as well. So again, it's a failure setup, right, into a pullback setup as we come pulling back off the high. Now, these come in lots of different shapes and sizes. In fact, you can look left here and you can see one here, right? Strong pullback down off the moving average. Bears try to sell it, right? And of course, you can see it's a very small example, right? This is a much slower time frame, obviously, right? But failure into pullback. So strong move down, failure pattern, right? Failure pattern. Get those two tries off the moving average, right? Into that pullback pattern and that run back higher. Now, another pattern you want to keep your eyes on as we pull back is a two-legged pullback. Now, in that situation, draw the trend line overhead, and we want to use that trend line now as a key level of support. Now, a lot of folks ask me, could I combine that along with a failure pattern? Absolutely, you could. This could easily be a failure pattern and what we call a two-legged pullback, right? The term two-legged pullback coming from those two legs, right? Leg one and leg two as we go. So those are two very simple and very reliable pullback setups we can look for as we get down into, as I mentioned earlier, right into this key support area. Now, of course, I also have this kind of resistance here overhead, so it would be a good idea just to kind of identify what the plan would be if it goes sideways here, right? So we're bullish. If we go sideways here on this, how does the plan change? Well, just remember, anytime we see a range-bound market, the goal is to buy low, sell high, and avoid the middle, right? Buy low, sell high, and avoid the middle. So I want to buy low, and the best way to buy below the low of a range is to wait for the market to make a run lower, get the moving average coming over, get those sellers once again, right, to sell that pullback. And then once we know where those bears are getting in, now we can buy right into their stop losses for a nice, easy, short covering rally going higher. So if we do end up going sideways, make sure you're aware of that plan, right? It's called a two-try failure pattern if we go sideways. Now, what if we go higher here? Well, I think it really has a lot to do with how the market pushes higher. For example, you'll notice I've kind of got this area shaded in here, right? So you can kind of see where that wedge is. Now, wedges are tricky because the wider part of the wedge is definitely tradable. But as we start getting into the narrower parts here of that wedge, now we've really got to be careful. Does that make sense, right? Wedges are great patterns, but as we start getting higher up the ladder here, that wedge becomes very difficult to trade inside. So really what it comes down to is, do we run up, pull back, and do we see this market hold inside the wedge? Because if we do, then we know where the market is going to be reacting to, and we just got to get below that wedge because it's going to get a little bit too narrow up here to really do much with it. So if it does go higher here and we see it's holding that wedge, what you want to do is just going to mark up that prior swing and look for that same failure pattern into pullback pattern combination. So not a lot is going to change if we do go higher. I'm going to watch and see if that wedge, can play. Now, and again, the concern here is the wedge gets very narrow as we go, and the narrower it gets, the less likely you're going to have traders who are willing to trade inside of that wedge. So I want to get outside the wedge. And again, just like we talked about the move lower, the moving average coming over, sellers trying to sell it, sellers failing because it's not a bear market, it's a bull market, right? And we get that run back higher. That's the same idea, right? So if we do end up running higher here inside that wedge, just again, mark up that, right? Mark up that low, get that pullback. And again, I just want to get it outside of that wedge so I can make sure I free up enough space, get that moving average coming over, get those sellers to sell off of it, right? And we're off of the races now, finishing off that measured move target, finishing off that wedge target, right, as we go. Now, what if the market slams higher here? What if it doesn't care about the wedge, right? What if it just slams higher here? If it slams higher here, it'll probably end up going sideways around that measured move. Just wait for it. 1, 2, and hey, maybe we get a chance to use that trend line here right now as key support, and we can now buy off the low of that, right, of that channel. The key is, though, is if the market jumps up here, you don't want to be a buyer up here because, again, you're right up around the high of that range from earlier in the month of August. I would imagine we'll probably go sideways a bit here. If we do, we'll mark up that as our range. Wait for that pullback. Wait for that second try. Again, we call the 2-try rule, the 2-try failure pattern, and look to buy as we go back up to retest that high. So the only thing we haven't talked about yet is a reversal. And what does a reversal look like exactly? Well, there are 3 things to look for on a reversal. 1 is a strong move against the trend. Second is a pullback to the moving average. And third is a strong move off the moving average. See, that's what you need for a reversal. It's not enough to just get a strong move down. We have to see a strong move down, but they have to hold that pullback. If they can't hold that pullback, you know what's going to happen, right? Sellers are going to try to sell it, and buyers like me are going to be buying right into that failure. So we got to see that 1, 2, 3, and again, 1, 2 should come off the moving average, right? Mark up that low, mark up that low, and then watch closely up to that high, right? You want to go up to that big high, not the medium term high, but the bigger high up here. And that's going to find that what I call a hidden channel, and we'll look for that hidden channel pullback coming off of that high. So a 1, 2, 3 reversal. 1 is a strong move down. 2 is a pullback to the moving average. 3 is a jump off the moving average. It's that momentum coming off the moving average that really tells us it's a reversal. We don't want to chase after it, though, as it confirms the reversal. We now want to wait for that pullback and sell off that pullback. Now, where would the target be on this, right? If we got this thing to turn short here, where would that target be? Well, an easy target, as you can see, is back to that range right around 52, right? Big time target would obviously be the retest of that low in the low 50s at 50.52. So those are some easy targets we have right now for those sellers. But boy, I'll tell you, we've covered a lot here so far, right? We've talked about the pullback, how to use that failure into pullback combination. We've talked about how to draw it, right? How to find that trading range and look for that 2-try failure pattern on that range. We've covered, of course, this wedge pattern here. Remember, wedges are very, very nice patterns, but the problem is they get narrower as they go, which requires us to get outside of that range to free up some space. And of course, we talked about, right, that reversal. So we have everything we need here to go forward right now. But if you're here for the first time today, your head's probably about to explode because of all these terminology, right? All these details I'm just throwing at you right now. So if you're here right now for the first time, I want to give you a lot more information, a lot deeper dive into all of my favorite setups, failures, pullbacks, traps, and strength patterns. And to do that, what I'll do is I'll put a link in the upper right-hand corner here for you this evening to join our free trading classes. And we get the greatest free classes in the business here at School of Trade. Everybody loves these classes. I'll put a link in the upper right-hand corner. If you're a new trader, right, and you're serious about your trading career, that free trading course is a great step in the right direction. I'll also put a big red button below the video tonight on our trading blog. So grab the link in the upper right-hand corner for a much deeper dive into my favorite trading strategy, the same strategy we use every morning in our trade room, because this train is leaving the station. Let's keep going now. Over to the S&P now at this point. Over on the S&P. S&P is pretty clearly a bear market here today. Started off this morning with that big run lower. And of course, that big run lower keeps kind of making those lower lows. I think it's pretty easy to see here right now that we are definitely a bear market. The only problem is that you look at the bigger picture here right now. Let's zoom out on this just a little bit, right? We get that big run up, that double top at the high. And I'll tell you, anytime I see a double top at the high like that, I know that is a trading range. And of course, with that range, the buyers now, they're going to want to go all the way back up to retest those highs up around that 29.30 area. So big run up, double top off the high. That tells me, of course, look for this as a range. And of course, what do ranges tell us? Ranges tell us to buy low and sell high. So here we are now, right? If that's my double top with that trading range, we are right at those lows now. And I'd like to be a buyer, right? Coming off of this low, going back up into that trading range. The problem we have here at this point, though, is that we're not very bullish, are we? We are quite bearish, as you can see right now. So knowing that we are bearish, I've really got to be a little bit careful here right now, because I don't want to just try to buy a bear market, right? As we talked about on the oil. Now, I really think the big variable here, right, kind of the small hinge that will swing the big door here, is probably going to be that rising support trend line. Because, in a bear market like this, I want to sell at resistance. So I mark up the low, I bring it up to that high, and obviously, I want to sell off of that high. But the problem is this: if we have a short-term pullback right now, if we run up to that high, well, guess what? Now we've got that rising support trend line. This is the same idea as that two-legged pullback that I talked about on the oil chart just a few moments ago. Now, with that said, I can definitely sell this market, but I've got to get below it, use it, and sell it with that two-legged pullback setup. And these are not easy setups, right? These are not easy sometimes, because as you can see here, it takes quite a bit of patience on this. So we know we're bearish. We want to be a seller, but I can just anticipate this, right? You can easily anticipate this. By the time we get back up to retest that high, I'm going to have no choice here now but to draw that trend line coming up. And of course, now that trend line makes it very difficult for me to sell into that trend line, which again does not negate this, but it definitely tells me I've got to be patient, wait to get underneath it, and wait to use that level now, right, as that key level of resistance. Again, we call that what? A two-legged pullback pattern, or 2LP. And again, that just comes from having two legs on the pullback, right? Pretty clever, right? Now, what I'm also anticipating here would be if we get sellers that really can't crack this trend line and we start getting a short covering rally. Short covering rally would take on two different opportunities here to be a buyer. Now remember, the most important thing is we've got to see some strength here right now coming off of that moving average. Right? Remember, just seeing a pullback is not enough. What you need here right now is we need to see some strength going higher. Now, when we do get that strength going higher, if we get that strength going higher, I'm looking for one of two patterns. One is going to be what I call a two-try breakout. We go running higher. The sellers now will sell once. The sellers will sell twice. And we can now buy into, right, those failures. So imagine now, as we kind of play this thing forward here, again, we know how we want to sell this market. We've got to get underneath this trend line here, use it as resistance. It's going to take some thread in the needle on that, right, to get that set up to work. If we just jump off of these lows, now that momentum starts to make sense, running back into that range. There are two basic patterns. One is going to be that strong move higher. If it's a very strong move higher, look for the bulls to take profit. Look for the bears to try to sell it. Notice how I draw this though. These are two sells, right? 1 and 2 with a higher high in between, right? The first sell is lower than the second. The second is exceeding that first. Once we see those profit-taking sellers, right? The buyers take profit. They become a seller up there. Then, of course, the second attempt here is for those bears taking, right, to get short here. Once we see them in, now we know where their stops are, and we're buying directly into those stop losses. Because you got to remember, you need to use those stop losses as your fuel up there, because you're technically buying pretty high. But if you can get a strong enough move going higher, you should be able, right? You should be able to get that set up, right? And then get at least a 1-to-1 size of the risk, right? Size of the reward for that first target as you go higher. Now, that would obviously be the most aggressive one, right? The more conservative here now, be a strong move up. I'm going to mark up that high now, mark up that low now, right? And then look to buy that pullback from there. Again, both of these include a strong move going higher. Okay, we're not trying to do this inside that battle zone, right? We're trying to be a buyer here, but after we see proof of these buyers taking control. So one option, again, is that strong move up, 1 and 2, being a buyer into those stop losses of the sellers. The other option, again, is a 1, 2, 3, mark up that high, mark up that low, find that hidden channel now. And again, we're looking to buy that pullback here as we go back up into that trading range. Now, what if I'm wrong about that short covering rally, right? What if I'm wrong? What if we run lower and finish off that measured move? I mean, after all, it's a very strong bear move down. That measured move is right there at 28.70. If I'm wrong on this and we just run down to that measured move, I'm always looking for a double test of a measured move. So if we do get that measured move, most of the time when we get a measured move, the market will bounce off that measured move, which is basically profit taking, right, from those sellers. The buyers, of course, will try to buy that pullback and, of course, will sell right into their failure. Okay, these patterns are very, very common, right? Look back in time. We go up above the moving average, the buyers try to buy it, and of course, sellers are looking to sell right into it again, right? We go up above the moving average, buyers try to buy it, sellers, of course, know the market is bearish, and they're going to sell all day into any buyer failure. So if we do, again, make that run lower, wait for that profit taking, get back above that moving average, look for those buyers to try to buy off the pullback. Again, it's not a bull market, it's a bear market, but you'd be amazed at how many times rookie traders, I know I did the same thing when I was a rookie traders are always trying to call tops and bottoms because it's almost instinct, right, for a human being. When the market pops, we try to chase after it. So let those buyers try to buy that pullback, right? And of course, people like me be waiting there to sell right into those stop losses for a retest of that measured move. Most of the time, when we get those measured moves, we're also going to get a second try to get that measured move hit again. So if you can't get in, right, if you miss the initial test of that measured move, don't worry. You'll usually get that second attempt. And don't forget too, right, if they hold that pullback and they run off that measured move, great. Mark up that high, mark up that low. Now we know where we have our channel, right? One, of course, will be that hidden channel pullback. The other, obviously, could be that strong move up, that 1, that 2, okay, that 2-try breakout pattern that we talked about originally, right? So as we go higher here, plenty of ways for us to be a buyer on this. And again, the buyers are going to want to be going back up to retest, right, that 29.30 area. So definitely keep your eyes on the rally going higher. Look for the hidden channels. Look for those 2-try breakouts. If we do roll lower, wait for the pullback here right now. Wait for that pullback. And our plan is looking pretty good there on the S&P. How about the Nasdaq right now? Now, I'm kind of thinking the same thing in the Nasdaq, but it's a little bit different. So let's talk about this as well. We can obviously see here, like I mentioned in the introduction, we know we're bearish right now, right, on that Nasdaq. And of course, with the Nasdaq being bearish, I want to sell at levels of resistance as my core strategy in a bear trending market. The problem is, though, is it's pretty easy to see that this channel low, channel high. We're sitting right at that channel low. Now, what do we do at a channel low? We take profit, right? So we're expecting there are going to be a lot of sellers that will be taking their profit here. And of course, profit taking leads to what? Leads to a rally. Profit taking leads to a rally off of that low. So bottom line is we're in a very bad spot to be a seller, right? Not a great spot to be a seller. So hopefully we can catch a short covering rally as the sellers realize they're wrong, as the sellers take some profit after the overshoot, right? We should be able to get this market popping higher here. Another big clue is this trading range. Now, what does a range tell us? Ranges are what? These are balanced, right? Ranges are balanced. What goes down usually comes right back up. What goes up usually comes right back down. And I think that is probably going to be the most important clue that we have on this chart, right? Because we know we're bearish. But you can see, though, the day starts off, right, and pretty much sits inside that range for pretty much the entire morning session before this last-ditch effort by the bears to run this market lower. And you can kind of tell, right, it almost feels like they realized, oh, shoot, right, we went too far because you got that measured move. And you'll notice they came right back up to that measured move here to finish off that session. So it looks to me like we're bearish, but we're in a horrible spot to be a seller. Not to mention, it looks like almost these sellers bit off a little bit too much than they can chew. So I'm hoping that we can kind of get this momentum that's now swung lower. I'm hoping we can get that momentum now to swing back in the opposite direction. So let's think about this here for a second. What's the best pattern to buy in a bear market, right? I mean, isn't that what's happening right now? It's an overall bear market. I want to be a buyer because we're at the low of the range, we're at the low of the channel, we're at a measured move support area. But again, I got to be careful being a buyer in a bear market. So here's what I like to do. When I'm trying to be a buyer in a bear market, I have to anticipate these sellers, they're going to try once, they're going to try twice before they give up. And I call this a nested two-try failure pattern. This is very similar to just a standard failure pattern, which you guys will learn all about in that free trading class that I mentioned earlier. Don't forget, if you haven't taken the free course yet, make sure you take our free trading classes because it will almost overnight. Most people tell me that it literally changes the way they look at the financial markets in an instant. So definitely take that free trading class if you haven't done so already, because you'll learn about these failure patterns right in that free trading class. And again, don't forget, when you register for your course, make sure you check your email inbox, including your spam folder, because sometimes those emails get stuck in that spam filter. So again, we know we're bearish, but we're at a horrible place to sell. We're at a great place to be a buyer right now, but we're still a bear market. That's the thing. We're still a bear market. It's not like this is a bull market. So I have to be careful. Right? It's much different, right? In a bull market, I could simply buy into seller failure. But in a bear market, I need to let these sellers try once, try twice, and once I see those bears trying twice here, now I can look for that buy signal to buy off of that low. Now, what if we don't get it? What if it runs right back up into this trading range? Then what do we do? Well, again, you don't want to trade inside the range, right? You want to buy low and sell high. So let's play this game here. Let's kind of play a couple different examples here. One would be we go back into the range and we just kind of settle in here, right? So here's one scenario. One scenario is we run back into the range and we get stuck in the mud again, like we saw this morning. Very important clue, because that tells us momentum has now been absorbed. Now what do I want to do? I want to sell high up here, right? I want to sell above that range. What's the best way to sell above a range? Two-try failure pattern, right? We go up, one try for the bulls, two try for the bulls, and we sell that sucker back down. Now again, these come in lots of shapes and sizes, and I show you hundreds of examples of these failure patterns in that free course that I mentioned earlier. So definitely take me up on that offer for that free course. Now, another question though, right? What if we don't stall out inside that range? What if the market just runs? Then what do we do? Do we still just sell the high? Well, no, at that point, now we've got a lot of momentum now. Again, the two components. One would be we go up and we get stuck in the middle, right? We absorb the momentum. Or the other is we run up and go right through that range, which allows these buyers now to gain momentum. Momentum, as you can see, is the key component here, because if we just slice right through that range and run higher, yes, I do want to be a seller up here. I got a bunch of levels of resistance you can see here. I'm watching up here, but now that momentum, I have to respect it. I need to wait for those buyers now to try once, wait for them now to try twice, and once I see those buyers trying once, lower low, trying twice, now I can look for that nice strong sell signal and I can short this bad boy back down into that trading range. It's almost identical to the same pattern we need to be a buyer right now. Strong move down, one try for the bears, two try for the bears, right? And then up we go from there. One try for the bears, two try for the bears. It's called a nested failure pattern. Okay, nested failure pattern. If we run up into the trading range, I want to be a buyer, one try, two try. Again, it's called a two try failure pattern. Or if we go back into the range, sit in the range for a bit, one try, two try, one try, two try. Again, two try failure, and we can sell back down. However, if we just blast higher here, I can't sell it unless we see a one, a two, and then back down. Why? Because of momentum. But why don't we buy that? Well, we can if it goes 1, 2, 3 and holds, right? We can buy it as long as it turns bullish. If it's just a strong move higher, it's still at the top of the range. It's not ripe to be bought yet, right? I can buy it though if it pulls back, holds, and runs. Then we mark up our new channel off those lows. You get the point, right? Gotta wait for that reversal. And believe me, I know it's not fun to wait for it. I know it isn't, right? And I know it's very tempting to want to buy that first pullback, but the reality is that first pullback is not a very reliable pullback because of the range, right? We want to wait for the 1, 2, 3, then buy that pullback as we pull back from there. All right, guys? So great job here on this. The last thing we haven't really talked about yet is what if they run this thing lower? Right? What if they run it lower here? If they run it lower through here, that would tell me we're probably looking at this a little bit incorrectly. If they run it lower, I'm going to mark up those lows, make a hidden channel here, and look to sell off of that high. So if we do end up running lower here, you know, for whatever reason, right, as we open up in Asia, whatever you do, don't sell it low, sell it high. Up around the high of that channel, up around prior levels of resistance, right? Don't sell it low, sell it high, and vice versa. And don't forget, guys, I'm simply drawing on the chart right now, but if you want to see hundreds of examples of how we apply this strategy to our favorite markets, grab that free course in the big red button below the video, right? Or hit that link in the upper right-hand corner here on this YouTube video. Next up here, over on the gold. So gold right now is very bullish, as you can see. There's definitely no doubt about that. But as I mentioned earlier, that bull market spent a lot of time in that cute little cuddly little range right there before, you'll notice, it skyrocketed up. And then just as fast as it went up, it came right back down again. And so we're led to believe that this magnet is really what's in play right now. So we're definitely bullish here, but it certainly looks like those buyers bit off a little bit too much than they can chew. I mean, in all reality, they couldn't even get that measured move right up around that 32.4 area. So you know something's wrong when that much strength won't finish off that measured move either. So I know we're bullish, but I think it's going to be difficult right now to justify being a buyer on this, just because of the fact that we saw it go straight up, straight down. Buyers had literally a silver platter, right? That buy opportunity off the low of this channel. I mean, the buyers had a buy set up off the low of that channel that is fit for a king, literally, and they couldn't get it done. And so that definitely tells me right now, I mean, why on earth weren't they able to buy that pullback and run it? That tells me something is wrong here right now. And the buyers, they might just not want to buy this high, but something tells me this range is going to be the magnet here. So remember, anytime we see a trading range, it's buy low, sell high, avoid that middle, keep using that balance area, that magnet as your target. So how do we sell a bull market? Yeah, very carefully. You're exactly right. Remember that pattern, that nested pattern? Strong move up, let the buyers try once, let the buyers try twice. Yep, that's exactly what we're going to try for here on the gold. Let these buyers try once, let them try twice. Ideally, you want that to be a lower low in price. So as we go up, we pull back, the buyers tried once. I'd like to see a slight lower low on this. Get the buyers trying a second time here right now. Get it up so we can then sell high up here. If we really get lucky, this will be a trap high overhead. It's not required, but that would really make us, right? That would really make us happy getting a trap high up there, right? That then becomes the one try. That becomes a two try. That is the same nested variation that we talked about earlier, right? If I want to be a seller, but the market's bullish, I've got to let those buyers try a couple times before I can be confident to sell this thing back down again. And then what if I'm wrong, right? What if this market just runs back down into that trading range? If we sit back inside the range, this is very similar to what we just talked about on the Nasdaq. If we end up collapsing back down into that range, do we sit inside the range? Because if that's the case, then I can use a simple seller failure pattern, let the market try to go below the range, get the moving average coming over, let those sellers try to sell off the range. You got it, right? And we're buying into that failure. It's a classic seller failure below the low of a trading range, right? Good example back here. Price goes down, bears try to sell it, they fail, buyers are waiting to buy below that range. Some of those patterns are much larger than others, but the key here is though, is that if we do end up back inside this range again, and we sit, again, that's the key. We sit inside that range, that will absorb all the momentum for the bears like a dry sponge, and then all we need is to get them to try to take the market lower. Once they try to take that market lower, I, of course, bring my moving average over. Bears will now try to sell off that moving average. We know the stops are, and, of course, looking to buy into those stop losses. But maybe we don't get that, right? Maybe we don't. Maybe we get a strong move down, right? Maybe that big pop higher completely unravels now, and this market collapses back down. Now, at that point, the range is still the magnet, right? The range is still the magnet. It's still the balance area on this chart. So how do I buy it if it goes running lower? I got to respect those bears. Let them try once. Let them try twice. Once I see once and twice. And again, look for those higher highs there. That's when I know I've got the green light here to be a buyer, because again, that momentum is so strong to the downside. And then how would I sell this market if it goes lower? As it goes lower, it's got to prove to me 1, 2, 3 reversal. Mark up those lows, mark up that high, you got it. And now we're looking to sell off the high of that hidden channel. But again, 1, 2, 3 reversal. 1, 2, 3, then we start to look to sell up off that high. That's the way I want to trade this thing short as it goes below that trading range. Of course, target on that now is backed out of that big round number at 1,500. So a great chart here on the gold. We want to buy below the low of that trading range. You know, what if we jump up, right? What if we jump up and we retest those highs? Then what do? Well, remember, anytime we see a measured move, we usually get a double test. So if we do run up, we have not hit the measured move yet. If we do run up and get that measured move, look for that pull back, look for that moving average coming over. Sellers, of course, to sell off of it. We know better than selling a bull market. We look for that failure into pullback and get that run back up, right? That failure into pullback and run that baby higher. right? Or maybe they keep going, right? Maybe this thing keeps going. Maybe it runs through that measured move. When it runs through the measured move, don't forget, use that initial measured move, right? If we keep, for example, if we keep running higher here, we run higher, I'm going to wait for that pullback, right? Try to buy low. I'm always trying to buy low. I'm always trying to buy at key levels of support. And again, the same size of that measured move now becomes my next target. All right, so imagine now, let's kind of draw this, obviously not drawn to scale here, but imagine now we make a run higher, moving average comes over, we get that deep pullback, those sellers, of course, are to sell, looking to buy into their failure, buying that pullback as we go higher. And again, we'll use that measured move now, right, for our final target. So great stuff there on the gold. If we push higher here, we're looking for that pullback to buy at a level of support. And my favorite ways during those deep pullbacks are on those failure patterns. Let's keep this going here. Wrapping up here right now over on the euro. The euro, of course, is a range-bound market, right? It's a range, double, triple range here right now. We are very balanced, right smack between the 13,000 and 12,000 big round number. I've got a trading range right in the middle of this chart, right? That's, of course, the magnet, right? That's the no trade zone. I want to buy low as we go lower. I want to sell high as we go higher. Quite the simple plan here right now, right, on this euro. I've also got my trend line coming down as resistance, my support trend line coming up right below. That creates a bit of a triangle. It's pretty much all the same stuff though, right? Pretty much all the same stuff. So I want to be a buyer. I definitely want to be a buyer because as you can see as I zoom in on this, right, we have a very strong recent move higher here. Okay, one of the most important things you need to learn as a new trader is anytime we see a strong move in one direction, we almost always see another leg in the same direction. You can go back in time here and look at this example back here, right? Strong move up. That strong move up is probably going to give us another leg. Now, at the very least, that second leg will retest the high. At the very most, that second leg becomes a measured move, right? A, B, C, D, measured move. Okay, the moral of the story though is when I see a real strong move up like this, I really don't want to be a seller just yet. I want to wait for them to pull back, get that second leg, then I can start looking to be a seller. At that point now, we are very bullish, obviously. I want to be a seller, but what was the pattern again? It's that nested failure, right? It's that 1, it's that 2, and then back down we go. So again, a couple things here right now. You don't want to get too aggressive trying to sell it yet because of that big bull run. Once we get that follow through leg, now look for those buyers to try once, look for those buyers to try twice. With the right signal candle now, we'll drop that back down into that trading range. Or maybe we get a gift from the trading gods, right? Big strong pullback. Maybe we make a run lower here now. I mean, that would be ideal, wouldn't it? I want to buy low. We got that big bull run. What if we pulled back here nice and sharp? Moving average comes over. Yeah, look for those sellers to try and sell off the moving average. They fail. I'm not sure if we'll get a chance for a pullback on that. Probably not going to get a pullback unless it really pulls back out of that range, right? So, for example, if we get a really deep pullback, I could do a failure into a pullback setup. Right? Failure pattern into a pullback pattern going higher here because that pullback pattern would still keep me outside of that trading range, right? But if the pullback isn't that large, let's say, for example, the moving average comes over, right? The bears come in, try to sell it. I won't be able to get that same pullback pattern and avoid the middle of that range, right? That's the problem. You can take the failure pattern on this, but the pullback pattern, if it's right inside that range, not a very reliable setup to be traded inside that range. So again, we've got that strong move higher here, right? I want to anticipate that second leg. Then it's the nested, the 1, 2, and back in. 1 try, 2 try for the bulls. Short that sucker back in. Or do we get lucky and get a nice deep pullback here? If we can get that deep pullback, the moving average comes over, Bears now, of course, will think this market's bearish. They'll try to sell off of it. It's not a trending day, though. It's a range-bound day. And so we know that wherever those sellers show us, right, their stops, we can now buy right into those stop losses going back up into that range. So as you can see, the strategy is pretty simple, right? Buy low, sell high, avoid the middle. What's a little bit tricky is making sure that you absorb or you respect the momentum in the market, right? So because of that bull market right now, okay, I know I'm at the top of that range, but I can't just sell it, right? Like we saw back here, right? Yes, I want to be a seller, but I got to wait for that second try, then back down into that range we go. So respect that momentum. And speaking of momentum, what would a range breakout look like? It's just like a reversal, right? It's a 1, 2, 3 breakout, right? Strong move up, pull back to the moving average, 1, 2, 3. Mark up that high, mark up that low, right? Of course, mark the high, that finds the channel, mark your sweet spot. And again, you'll see a lot of examples of these in that free trading course, right? But that will be your next leg up. This could easily happen. It's going to happen at some point. You know, this market's probably not going to sit here inside this range forever. Eventually, we will see a breakout. Just remember, though, breakouts cannot be trusted until we get that 1, 2, 3 breakout pattern. Same to the downside. 1, 2, 3. Strong move down, mark that low, mark that low, mark that high. That creates our hidden channel now. And, of course, we're selling off the top of that channel. So a great opportunity here on the euro to buy low, sell high. Just remember, pick your battles tomorrow. Stay out of the range. I would much rather sit on hands and not trade inside the range to save my ammunition, right? Save my contracts to be able to, of course, buy low and sell high. So great lesson here tonight. Euro, gold, Nasdaq, S&P, and crude oil. We got some great opportunities setting up for us tomorrow. And speaking of setting up for tomorrow, I want to see you there with me, trading the strategy with me in our trade room. You know, every morning we open up our trade room at 8 o'clock Eastern time because honestly, the strategy is very simple, but what's not so simple is applying it to a moving market. And I think most people have probably learned that lesson already. Trading seems very easy, right? Buy low, sell high, but I'll tell you, sometimes the markets move very quickly and you've got to make some split-second decisions, and sometimes the markets barely move and you have to stay disciplined and patient. Guys, this is why our trade room is such an advantage for all of our clients, because every morning we trade it together. That way, whether you're brand new or a grizzled veteran, you'll always know where the best setups are, right? The best traps to avoid. Avoiding losses is more than half the battle, and we always have a great day in our trade room. I hope I see you guys there tomorrow morning at the opening bell. To get started as a new client, it's very simple. Just get registered right on the website here below my ugly mug. Grab the advanced class. That advanced class includes all of our video classes every day in the trade room, ongoing support. Heck, I'll even remotely connect to your computer and set the whole thing up for you as part of our advanced course. So learn more about advanced course, get registered for the advanced classes, and I'll see you tomorrow morning in our trade room. If you're not ready yet for membership, that's no problem at all. Make sure you grab the free trial. The free trial includes our free trading classes, a free pass to our trade room. You'll learn my 4 favorite setups, my 3-step strategy. I get so much amazing feedback. People who love that free trial, the free course comes along with it. So definitely take the free course if you're not ready yet to be a client. But no matter what you do though, be careful tomorrow. Again, bunch of ranges. We're looking for some short covering rallies on the E-minis. And of course, I'm looking forward to seeing you tomorrow morning, bright and early at 8 o'clock Eastern time. Hope you guys had a great weekend. We're back in the action this week, at a full week ahead of us. If I don't see you guys tomorrow morning at the opening bell, I'll see you same time, same place tomorrow night on the next edition of this nightly newsletter. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.